Hello and welcome to Easy Money with Don Anders. I'm joined today with Tom Hegna. Tom Hegna is a best-selling author. He's also a PBS show host and all about retirement, retiring happy, the best ways to retire. So first off, thank you so much, Tom. If you've missed our other videos, I'm going to go ahead and link the playlist right up here. You can take a look at those. But today we're going to talk about annuities, or like what I like to say is the A word, because it's such a hot topic nowadays. Now, people probably have heard Ken Fisher, Susie Orman, or Clark Howard, or whoever else talk about annuities. Some like them, some don't. But what I like about your approach to it is you approach it more of a scientific and statistical reason whether or not somebody should get an annuity. So, can we get into why somebody might want to add an annuity to their retirement?
Yeah, and Don, thank you for having me. I don't sell any annuities, all right, but I own 11 of them. And if annuities were dumb products, stupid products, I would own exactly zero of them. And all I can tell you is anybody who tells you that annuities are bad is not educated in retirement. They have not read the white papers I've read, because it's unanimous among PhDs and economists that you need to have an annuity in your portfolio, that any retirement portfolio that does not contain an annuity is going to be suboptimal. Now, that doesn't mean it's going to be bad, but it means it'll be less than what it was otherwise could, or what it should be. Because the way that the annuity functions inside of a portfolio, it functions like a AAA rated bond, because that check is guaranteed every single month for the rest of your life. With a triple C rated yield, the payout rate is much higher than what you get from bonds or CDs or money market funds with zero standard deviation. It doesn't fluctuate. So for all the people who say they hate annuities, I say, wow. What if I could get you a AAA rated bond with a triple C rated yield with zero standard deviation? Oh man, I would love that. Yeah, well, that's exactly how the annuity functions. So again, this isn't me talking. I would encourage your listeners to follow the PhDs who study this. Dr. David Babel of Wharton, Dr. Moshe Milevsky of Toronto, Dr. Menachem Yari of Israel, Dr. Michael Finka from the American College, Dr. Wade Pfau from the American College, Dr. Robert C. Merton, a Nobel Prize winner, published in the Harvard Business Review. This isn't what I'm not making this stuff up, all right? And so it's the only product in the world you can buy that will guarantee you will never ever run out of money. See, Don, the big problem in retirement is, we've got some money, but none of us know how long we're going to live. And because we don't know how long we're going to live, most people live what I call a just-in-case retirement. They don't touch their money. They don't touch their money. I say, wait a minute now. You told me when you retired you're going to join the country club. You're going to buy a new boat. You're going to go see the world. Have you done that yet? Oh, no, interest rates are too low. The market's so volatile. Bitcoin crashed. They're living what I call a just-in-case retirement. So they don't touch their money. They don't touch their money. They don't touch their money. Then they die. What happens to money? Goes to kids. What do the kids do with it? They join the country club. They buy a new boat. They go see the world. I tell people, no, I want you to join the country club. I want you to see the world. You're supposed to spend all of your money. See, people are trying to save this money. They want to leave it to their kids. You're not supposed to leave it to your kids. You're supposed to spend all your money. We talked in another episode, use life insurance to go to the kids, but you spend your money. Well, how do you spend your money if you don't know how long you're going to live? Well, you put some of it, at least a portion of it, into an income annuity that guarantees you will never, ever, ever, ever run out of income. As long as you're breathing, that check is coming. And no, when you die, the insurance company is going to keep your money, okay? People just, they read this stuff, and you can pick how you want it. You want the money to go to your spouse? You want her to get a check for the rest of her life? You want your granddaughter to get a check for the rest of your granddaughter's life? These things can pay for 100 years. You pick all that up front.
Yeah, and what people don't realize is a lot of the talking heads who talk about annuities being bad, some of them, the reason they do that is because they're trying to sell mutual funds, right?
Yeah.
And then some of them, the reason that they say that is simply because there have been bad annuities, right? There have been some
Yeah.
where, yeah, back in the 70s, if you bought an annuity, there's a decent chance that it was going to annuitize and it wasn't going to pay out, and then the company would keep your money. But those are almost non-existent nowadays, or you would specifically have to purchase one of those for that. Annuities nowadays more than likely will have cash value available. They'll be able to be available for your beneficiaries in a lump sum or income, like Tom said. You can set it up where some annuities aren't even built for income. So when somebody says, "I don't like an annuity because they're going to make you, you're going to lose access to your money," there are liquid annuities out there. So that whole kind of hyperbole around retirement and annuities to me is a little ridiculous. Now, I hear you saying that you should buy an annuity. Now, are you saying that you should put everything into annuities?
No, like I said, I own 11 of them, and I'll tell you what I own and why I own them. First of all, I own 3 variable annuities. Now, those are supposedly the bad ones with the high fees. Well, you know what? I don't think I'm any different than any of your viewers, okay? I've announced my retirement. I have enough money to retire for the rest of my life. So you know what I want to do with my money? I want to make as much as I can make. If I can make 10%, 20%, 30%, I want to make as much as I can make. But just as important, for me more important, I don't want to lose what I've already got. Well, guess what? Vanguard can't do that for me. Fidelity can't do that for me. Mr. Kent Fisher cannot do that for me. That's what a variable annuity can do for me. I own 3 fixed indexed annuities. Why? Because there was a super smart PhD by the name of Roger Ibbotson. You can look him up. You can read the whole study he did. And he compared people who had a 60% stock, 40% bond portfolio with people that had a 60% stock, 40% indexed annuity portfolio. And guess what he found? He found that the second portfolio outperformed the first portfolio for the last 40 years and is likely to do so for the next 40 years. So even if you just moved your bond portfolio into an annuity, you're likely going to do much better. And then I own multiple income annuities. Why? Well, they don't have any fees and they guarantee me a paycheck for the rest of my life. And I want to have as much guaranteed income coming in so that I can play golf, I can play pickleball, I can travel, I can do all the things I want to do without worrying about where interest rates are or what the market's doing or who's in the White House or who's in Congress. None of that matters. I'm getting these checks every month for the rest of my life. They're my paychecks, but more importantly, they're my playchecks. I get to play with that money.
And what you might have missed when Tom first said, when he started talking about it, is he has enough money for retirement. And what annuities will do is they will keep you there. Because the saddest thing you can see is somebody go from having enough money to not having enough money, right? And so what he's done is you've guaranteed that you have enough. You have your risk, you have your fix, you have your growth, you have that. Now, and I'm assuming you're fine with mutual funds, but for the amount that's above what you need, correct?
Well, look, I'm not opposed to mutual funds at all, but I think they're more appropriate for younger people because younger people have 20, 30, 40 years. When you're older, see, I say, what would be the stupidest thing? If I got enough money to retire right now for the rest of my life, what would be the stupidest thing I could do? Lose that money. That'd be the stupidest thing. Can you imagine? I work, I save, I invest, I do everything right for 60 years, and then I retire and the market drops and stays down for 10 or 15 or 20 years. Remember, the Japanese stock market has been down for over 30 years. The European stock market has been down for over 20 years. What if that happened here? That would be the stupidest thing I could do. So I want to make as much as I can make, but I don't want to lose what I've already got. And I would encourage your viewers to do the same thing because let me tell you, we're at near all-time record highs in the market. We've got all this funny money that we printed. We print trillions and trillions and trillions of dollars. Now, when this taper starts and they start taking this money back out, what do you think is going to happen to the market? All right? I don't know, but I don't think it's going to keep going up like what has been going, and I don't want it. We already had a lost decade. I mean, everybody who's watching has lived through the lost decade from 2000 to 2010. The stock market did zero. All right. Well, if that happens in your retirement and it goes down 30 or 40%, then slowly goes back up, you're not going to be happy in retirement. But I am.
Yeah, and we're 13 years.
What.
We're 13 years into the bull market, right? So a lot of times, if you talk to somebody who's retired in the last 5 or 6 or 7 or 10 years, they might talk about how well they've done in mutual funds. They might talk about how well it's going. The problem is 10 years is not a long time. You might be retired for 40 years. There's some studies coming out now that people who are in their 30s now, the average life expectancy might be as high as 120. So you might see people retired for 50 or 60 years. And so the issue there is that if you're looking at somebody who's been retired for 5 or 10 years and telling you how well that they've done, my recommendation is maybe talk to somebody who retired in 2007 or 2006. They might have a slightly different perspective than you. From my experience, my clients who are in their mid 70s and experience or late 70s or 80s and experienced 2008 and experienced the tech bubble crash while they were retired, not necessarily while they're working, because right, remember when they're working, you're still saving money. It's there. They're not having to draw out of it. The people who went through those stages have a completely different perspective. So my recommendation is sit down and talk to somebody who can, actually show you historically what it would look like. What if I retired this year? And this is a really good question for those of you about to retire. If you go meet with the financial advisor, ask them, if I retire this year and a 2008 scenario happens next year, what will happen to my portfolio? Can you run that out and show me? And a lot of people they would run out of money based on how they're allocated if you don't have these types of protections. So
the other thing, Don, real quick, is that the research shows you're likely to be happier and live longer as well if you have money in annuities. So let me just share a couple things. The Wall Street Journal headline: "The secret to a happier retirement is friends, neighbors, and a fixed annuity." And they found that the happiest people in retirement were those surrounded by their family, surrounded by their friends, who had guaranteed paychecks every single month. Time Magazine found the same thing in Great Britain. Lifetime income stream key to retirement happiness. And so you're happier in retirement if you've got guaranteed lifetime income. And now the research shows you're likely to live longer as well. There was a Freakonomics study, it's actually a University of Chicago study where they studied people who bought annuities versus people who didn't. They found that the people who bought annuities lived longer. Research shows that people who buy annuities tend to live longer, and not just because they're the kind of people that have the money to buy annuities to start with. It's apparently that little extra incentive of the annuity payout that keeps people going. And then there were other articles as well, written by Patrick Tricker in the Journal for Financial Services, that show a 65-year-old male in the United States who purchases a life annuity can expect to live about 20% longer than a 65-year-old male who does not. And so there's multiple research out there showing you're going to be happier, you're going to have less stress, you're going to have more peace of mind, and all of that leads to a healthier and longer life. So those would be the reasons why that's why I own annuities. I don't sell them, but I encourage your viewers to at least put a portion of their portfolio into an annuity.
Yeah, and so we'll link as many of those articles as we can down in the comments if you want to do your own research. The ones that Tom quoted, we'll link as many as we can down below. And the other thing I would say, just from a financial advisor perspective, the best conversations we can have is when people come in and they have more money, more income than they know what to do with. That is a good problem to have. The saddest conversations are when people come in and their house is in disrepair, but they're worried about taking any money out because they don't know whether or not the market's going to do well, or they can't go on that trip with their grandkids because they don't know if they have enough income. That's a sad conversation to have. And so if you have enough money to create extra income, even if it ends up being more than what you need, that is a really, really good thing. Thank you so much, Tom. In the next video, we're going to talk about the ways to retire happy and the 3 stages of retirement. So make sure you tune into that, and we'll talk soon. Thank you so much for watching my video. I hope you enjoyed it. If you want more information about retirement, making money easy, investing in general, please consider subscribing. You can do so right here. And if you want more information and more videos that I did with Tom, go ahead and click here. That's the playlist. We did about 5 videos all about retirement, talk about life insurance, annuities, how to retire happy. I hope you enjoy it. Have a great day.